Thank you for that. In looking at your website, something struck me, and I always get the question about ESG investing, and I know you said they're not the same, but from a public standpoint, that's what we're looking at. You said this was much more private. You had a phrase in there that was beyond profits, and we touched on this a little bit, but can you tell me a little bit more about your investment thesis for renewable energy and the profitability within that space? Because at the end of the day, when people are putting money at something, ultimately they want to see the return. So they want there to be some sort of viable, not just an altruistic donation to, make you get so much resistance. Public schools are helpful, but every time there's a vote to raise the taxes, they vote it down, right? So it's got to be a profitable venture for people. So tell me a little bit more about how that works for you guys.
Yeah, you make a great point. It's important to distinguish, impact investing from donations, right? This is not philanthropy. There at the end there has to be a viable and reliable economic benefit to the investments. And I think one of the things that's made impact investing more popular, in addition to the social elements, are that there are fewer and fewer trade-offs between the social impact, the impact benefit, and the economic return. It used to be that you would expect from an impact investment there to be a lower economic return in exchange for the impact that's being delivered, and that is increasingly not the case, that you have to make these trade-offs, and particularly in renewable energy, the trade-offs, I don't think there's a trade-off at all. I think that we are able to generate market level risk-adjusted returns from our investments while delivering substantial environmental and social impact. And the things that are driving that, it happens to be the end of February, and we've had a significant weather system move through really the entire state of California. I'm in Northern California. The power at my home has been out for the last 48 hours. Okay. And which would not be that great of an inconvenience, but the kids are also out of school this week for President's Week, so it's a little bit of a double whammy. I'm lucky that my office, which is not far away, we have power here, but we've been without power because of a down power line at my home for.
I was going to ask you if you're on a renewable energy bicycle that was powered.
So yeah,
my camera and your computer.
My 15-year-old son has volunteered to pedal the generator so that he can play video games. The economics of on-site energy production, as I said, it's cleaner, it's cheaper, and it's more reliable. And I think that from a pure economic standpoint, cheaper power, is always going to be favored over more expensive power, and for whether it's hotels or apartments or business, real estate owners, municipalities, the opportunity to pay less for your power, there's a clear economic benefit, right? It's making your business more sustainable. It's making your real estate asset more valuable, or at least more competitive, if not more valuable. So the ability to deliver power at a lower cost is important, and we're able to do that, through renewables and for a number of different reasons. Obviously, in the last 10 years, the cost of renewable energy technology has come way down as a result of production having gone up. But we also, in the U.S. at least, have huge government incentives, tax credits, and other incentives to that subsidize the cost of that energy. So, virtually everything that we do in the U.S. is benefits from a 30% investment tax credit. I mean, that's like 30% free equity for these projects. So, from an investor standpoint, that's a nice benefit, but it also means that power can be offered under a long-term contract more cheaply. Reliability, like I said, I'm experiencing the whole reliability thing right now, and between increasing severity of weather events, the problems with the grid and transmission. There's a whole host of reasons why power reliability is going down when we look at grid provided power, and at the same time the costs of that power being out are higher and higher. I mean, you can think of some extreme examples. If you're an owner of a data center or an owner of a crypto miner, without that energy, you're out of business. There is no business to be had without that power. The same could be said for for apartments and hotels and senior housing, and for a whole bunch of other different businesses. So that reliability is increasingly important, and the lack of reliability becomes increasingly expensive. And so when you add those two together, the thesis around why people want to utilize on-site energy is clear, but then you also add in the fact that it's cleaner. Depending on the type of technology we're using, it could be up to 80% cleaner than utility provided power, and that is that's an important impact element. I mean, I personally believe that climate change is the greatest risk that we face today. And that it's something that needs to be addressed, but importantly, we have solutions. We have solutions today that if they're deployed in scale, we can address the 2 degrees of global warming and carbon dioxide and other emissions. You mentioned flare gas, and methane is a terrible greenhouse gas, one of the worst greenhouse gases, and so we prioritize the impact that from our investments, but the economics really come first. I mean, in all transparency, when I first started looking at this segment, it was driven by the economics. It was an economically driven analysis that we performed, and the impact was secondary. But we make the impact, as far as measurement and reporting and everything, on equal footing with the economics, just to as a rudder, as a keel for our business, to make sure that we remain focused on examining opportunities to provide that impact.
Yeah, it's so interesting. I think when I grew up in this space, so my undergrad degree is in chemical engineering, and I used to work at Goodyear. And so this is back in the late 80s, early 90s. And I actually at one point put on a suit coat made out of those 2-liter Coke bottles, polyethylene terephthalate, or PET is what it was. And the dream was to be able to recycle this PET because it was the #1 most recyclable plastic there was on the planet. But it was far cheaper to make it from virgin materials than it was to actually gather the bottles and recycle it and purify all this stuff. So there's been a discussion. I was actually this weekend over with a discussion with a bunch of I consider to be very intelligent people that were trying to plan, or trying to hypothesize of where they thought the world was going to be. And one of the viewpoints was that it's going to be a better place because whenever we get to a certain problem threshold, like when we saw oil was at what, 160 a barrel, that so much capital flowed into that industry, it helped spur more economic development and helped spur other avenues for energy creation. And so what's, I guess, swirling in my head is your 30%, I guess, head start, if you will, from the government and this economic disparity. Where is the break-even point, do you think? So that's one question. And the second question is how it used to just, as you said, just be about the economics. Like at some point it was like, once we get to a higher economic trade-off, the investments will flow. You just won't be able to help it. It will happen. But there's been much more of a desire for the other side. And if you're leading, or at least putting up, all of the impact statistics as well, how much has that really affected the money flow? Like, is it like, what percentage? Would you give me a guess of like percentage of decisions that people make on the impact metrics versus the actual just solely economic metrics? It used to be 99-1. Like, what do you think it is now?
Right. So, so on the second question, as you said, 99-1 might have been a generous estimate, because people, what in the past, people just made a distinction between what their investments were and what their philanthropic activities were, right? There